Hey everybody, welcome to Trader Minute. It's great to have you on board. I'm Carl. Thanks for tuning in this afternoon. And I look at the market here down at pretty much the lows of the day. Financials taking a hit. Really, Morgan Stanley holding up better than the financials. We've got 4 days left on the trade, so we're going to go ahead and we're going to step out of Morgan Stanley. Okay, so I'm just going to go out and do that. I mean, look at Morgan Stanley down 41 cents down towards the lows. It's breaking the 20. It's just some bearish signs. It was holding up pretty well throughout the day, and then the market took a turn for the worse, and down it came along with it. So we're going to exit. We got 4 days left. We don't want to, there are financials, the big financials reporting tomorrow. JP Morgan, Wells Fargo, they're not necessarily going to impact Morgan Stanley all that much, but we're going to go ahead and take out. We don't want to have this turn into an all or nothing trade. And so just going to go out with Morgan Stanley here. I've got the order ready to go. Just going to use a market order. I just want to get out. So I'm going to and we got out at $1.19. So we exited Morgan Stanley, got out at $1.19. Now let's go look at Qualcomm. And same thing, we're here about the lows of the day. It held up most of the day, and then when the market started to drop heavy, it's where this started to drop heavy. Same thing, we got 4 days left. We don't want to take any more of a chance on this one, so we're going to go ahead and exit Qualcomm as well. Let me just go over here. Just got caught up in a sell-off here in the market. Looks like we're going to be somewhere in the neighborhood of 75 cents on this. Let me go ahead and I'm just going to market this and go ahead and get out of it. So we're jumped out. So we got out here 75 cents on Qualcomm. So we exited both of our positions on Morgan Stanley as well as Qualcomm. Again, the market's selling off like it did. If we look back here, earlier in the day, our positions were holding up fairly well. Boeing was down. These two were holding their own. They never went up much, but they weren't selling off with the initial round of sell-off here in the market. But when this latter stage of the sell came, so we go back over here to the charts and look at the futures here. However, the later stage, the first round they held up okay. This latter part of the sell here today is where they came down with it. Okay, and that's where we have options with what we got 4 days left till expiration. You don't want to hold on to them much longer. Okay, now the market's selling off. The only saving grace, we got some big financials out tomorrow. Is it gonna? If we look back here, we had a big day sell here, and then it got bought right back up the next day. But you look at this sell over here, not a lot of follow through, but it took a while to come back up. I think we're at a little bit different place for the market right now. We're starting to see more negative comments come out on the market. Doesn't mean it has to go down, but it puts that thought into people's minds. We looked at three of them today around lunch. We looked at Market Watch, Bloomberg, CNBC. They all had their own opinions of what was the main focus was the market might correct in here. It's due for it, but it's one day. We got out of positions. We don't want to take any more of a chance on them with 4 days left till expiration. But with one day doesn't mean, okay, the whole nice uptrend's over. We're going into a 5 to 10% correction. Need a little bit more than that. A break below 1820 would give us some, but it's due for some. And really, if the market starts to go back up, we're going to have some beautiful bullish signals setting up for us. One day down like this, and I used to always say one day does not a market make. And yeah, I mean, we'll see what tomorrow brings. If you get more further selling, yeah, we're down here probably towards the 1800 level if the 1820 holds. Gets through 1800, I'm a lot more bearish on the market. But even a break of 1820 it's still some pretty significant short-term weakness. This candle right here, and Jeff talked about it, I think last week when he talked about significant moves. This is one of those. You see a big old candle like that and all these little downs. It's wiped out the upside that we've been trying to maintain since What's that? Mid-December, trying to maintain that. Well, it just wiped it all out today down here to the 1820. So it's a pretty significant move. So we jumped out of our positions. We didn't want further risk to the downside there. Take losses on those. We're going to look for the next trades. And I'm sorry, if you have a stock you want me to look at, go ahead and put that in there. And just reading through. Max with Qualcomm. Oh, I'm sorry. Let me get this back in here a little bit. We had 4 days left in the trade, right? And if this happens to be the lows, then so be it. If it happens to break tomorrow, it might look like a good exit. So it might be a little bit early to say we're jumping out at the lows right here. We might get some confirmation tomorrow that might prove otherwise. We just didn't want to risk it. It comes down to risk reward. We want to risk what we have, basically almost have what we have left in the trade. Because if it runs down tomorrow again, with 3 days left, then in an option trade, you're going to do some major damage to our price here. We just didn't want to risk that further downside. Okay, so I don't know if we could have traded any worse, but we just didn't want it to get worse than it already was, if that makes sense. Okay. Take Two Interactive. There's a lot of stocks out there, and the market down so bearish like it is today. Overall, there wasn't a lot of really strong bearish signals yet. They're not there yet. There's some that look weak, but it's technically there's not a lot of great setups to the downside. All right, it's one of the reasons we're we're not looking on the bearish side of things yet. A little bit more confirmation and let these things set up a little bit. So Take Two Interactive. I don't know if you're in calls on this or if you're thinking of buying puts. Let me go to the trend rider. Yeah, I don't see a trade here. If I was in calls and it was a stop like this, I mean, definite close below the 7. It's even breaking below the 20. Might not have a lot of downside left in it. Might come down to about the 1725 mark. Okay, but if you're in puts, I'd probably stay in another day, but I wouldn't do any calls or anything like that in here with Take Two. And the VIX, now that's what you're looking. That's a little bit more like you'd expect to see on a day like this, right? Today it was down 13 plus points, and it was maybe about half of this candle. But with that last leg that I was talking about, where the market really dropped off, went over a little bit of a cliff there, is where you saw this thing about double from where it was earlier. So yeah, now a little bit more of a normalized reaction on the VIX than what we saw. Thanks, Martin. Costco. How low will it go? That's a good question. Really bearish move here. It gets this nice report out for December, runs up really nice, and really has sold off almost ever since. And they running through the 7 pretty hard on some big volumes. The prior low was 114. Let me back out here a little bit. Is that really a significant level? Not really. I think the bigger one's at 112. It might catch something at 114, but it wouldn't be out of the picture for it to hit 112. Right now, if you're looking to enter, it's a pretty big move, about 2.75%. Not all that far from the 7, but the option price is going to be elevated in here. You're going to bring on a little bit more risk if you're using the 7 as a stop. It could consolidate around 114. It's one of those trades. It's not the perfect setup for a put trade. It's likely to go lower, but it's not a great setup to get in. I think the risk reward would be a little bit high, especially I think the implied volatility has jumped here in the last hour or so. Okay. Las Vegas Sands. All right, so it's pulled back a little bit with the market, and I want to see what the other the others are doing. Yeah, MGM's pulled back. Win has pulled back. They've all rolled over. So they're starting to act more alike. What I think's going on here, if this does close below a 7, it doesn't mean the uptrend's over. It just means short-term weakness. It says the odds of downside are a little bit higher than the odds of upside right here. It doesn't mean that trend's over, right? But if it closed right at the bottom today, I'd get out. This is one of those tough holds. It would be if it closed right here, it's closing just under the 7. Do you stay in it? Do you get out? Well, it's pushing below 80. You can also look at it this way. Um, it got up to 80, went over it, and for the retest, failed and pushing down below it, which is a little bit bearish. Volumes, they're going to be decent. It's probably going to be up there towards maybe just under the high, probably very similar to what we saw on Friday on this. I'm still bullish in the area, but I think the main driver here is going to be the market. The market continues to drop, you'll see this drop. If the market holds its own and tries to go up tomorrow, you'll see this do the same. Um, that's what I see going on here with Las Vegas Sands. And the market with JPM, Wells Fargo, we'll see what those reports bring. It might react on those reports tomorrow. MPC, yeah, for a stock that was holding its own earlier, same thing, selling off with the market. It's similar as far as technically here to Las Vegas Sands. Well, sorry, Las Vegas Sands was already through this. So it's closing below the 7. If that's the stop, then I'd exit, get out. You can also look at this and say, all right, well, it's retesting support. It's retesting the recent highs here. I'm sorry, the past level of resistance here is support. How's the volume today? Pretty light, but if you want to play it on the safe side, I'd exit. Take the money off the table right here. Take what you got in here, and look for another entry. Get another strong push up here over the 80. Sorry, off the 88, up through the 7 and over 90. You got another chance here that these things breaking higher. But right now, I wouldn't risk it. It's just pulling back with the market. The market drops. It's going to take it right down below 88, probably down to 86, that lower Bollinger Band. So if I was in here, I'd exit and then look for another entrance. All right. And when you get these moves in the market and you got bullish signals like we did today, take them off and then look for another signal. That's the best thing you can do. And look for the next trade. Okay. Autodesk. Now this one's really holding up compared to everything else we've seen. Yeah, it's sold off a bit today, up high, rollover with the market. It's up a cent. Um, it hasn't been closing inside the upper band. What I would do if I was here, I'd give it 51. That would be my line in the sand. If it dropped below 51, I'd get out. I couldn't argue just getting out, taking a gain, and moving on. But if you want to try to ride it out, maybe sell a portion of it. If it breaks 51, then get out. But still above the 7, really outperforming the market today, considered everything that's going on. And it got a lot of big volumes there. That's what I do. I'd give it 51, and then a push below that. Then it's time to exit. AUI, right? So it's pretty similar. We were looking at silver wheaton, different since gold, right? But also very similar pattern. This is a trend rider bull signal. Had some nice bottoming action. It's kind of tough to see in here, but yeah, there is not the prettiest one, but there is a little bit of a double bottom pattern. Really, the area for it to break, you could say a couple. I think the bigger one's probably here around 875. It broke that. It's held that level today, pushing up higher off of a new high above 9, which is a pretty strong bullish signal. How far could this go? I'd put it probably up towards the $10 area. That seems to be the next significant level, and that's a big round number as well. Okay, let's look at Facebook. Yeah, I'm interested to see how the market's holding up. Now, Facebook went with the market, sold off today, down 3.75%. If my stop was on the 7, it's time to move on. It might hold 55, but really the best thing you do is sell it and then look for another entrance up through that 7 again to be bullish. If you held it tonight, you'd be risking some, right? And what you'd be hoping for is a bounce off 55 and try to run higher. But when it closes below the 7 like that, the odds go in favor of weakness more so than further up right away. Right, the bands are contracting in here, so yeah, there's just more odds here of further weakness. Boeing, no, we're not going to enter Boeing here today. We're not going to make a trade here today for the challenge. It's just too topsy-turvy, just too much turbulence out there. I mean, the bearish setups aren't that great. The bullish setups, they're okay. We want to try to pinpoint a really nice signal, so we're going to wait for a challenge trade for tomorrow. Okay. So good question, Richard. No, we're not going to enter a challenge trade today just because we want to let this market settle out. Okay, we don't want to jump in. We don't. If we try to get bearish on it and then all of a sudden it runs up, then we're in a bad place. If we get bullish on it and it runs back down, we're in a bad place. So we're going to let this thing settle out today and then look to enter one tomorrow. We don't usually go very long in between challenge trades. Yeah, Google. Big reversal today, and Jeff and I were talking about this earlier. How this here's basically the trend over the last couple months, and it's right back on it. Now this was up here today over 1140. We looked at this morning, looking pretty bullish, and then reverse hard to push back down off the 7. It's going to close probably around the 1120 mark. That's past resistance right there. Right on the trend line as well. So a break here would be a more significant move than the price action here, but still odds favor this thing breaking down to probably towards about the 1100 level, but a little bit too early, and I'd feel a little bit pretty aggressive if we went after this one. But yeah, it's a bearish setup and likely to run lower, but a little bit too early for what we're wanting to accomplish here. Tesoro. Yeah, talk about a clear break of that channel. This has been so volatile around these levels. 56, 58 and a half, right around that range. A clear break. Volumes aren't super big. Still going to be below that 50 there. Not as high as we've seen the last few days, but still, that's a technically significant break. Could you go after it here? It's over $2 away from the 7. There's a really good chance that this thing might come back and retest this channel right here at 56. That's what I like to see for a really good bearish trade. So if it comes back up to 56, kind of consolidates for a day or two, comes it back to 56 or even a little bit below that level, and then you get a day, maybe the 7 catches up with a little bit, you get a day like this, very bearish signal. What it did, it retest $56 as a new resistance level, and a run back off of that means it's probably dropping a lot lower. And how far could it go? Man, there's not a whole lot underneath it. Maybe towards a 52 level. There is some there, 53, 52, but probably go, but just a little bit early. We'd be chasing it. This is one of those that just got away during the day, just kept going and kept going. All right, but yeah. Lows. Yeah, this got caught up in the sell-off as well. This would be another one if I'm in this, if I happen to be in this, closing below the 7, it's a clear close below the 7, I'd get out. And then look and see it and maybe play it again. If it moves back up over the 7 and above 49, then you might have something going on. It just got caught up in the sell. It was holding up early this morning, actually up one point during the day, and then just that last little bit took most of the bullishness out of the few bullish stocks that were out there on that strong push lower that we saw in the market. All right. Yeah, and that's what we were looking. We always wait till the latter part of the day to see if we're gonna hold on to a stock or make a new trade, and see how it turns out. And what did it do today? It sold off and never really came back. Dropped a little bit, never had much strength as for much of a comeback. All right, Ken, nice trade on Apple. Down a buck, it was up quite up over 540 at one point. It's turning to run lower. Now it's off the lows. That little hollow means it gapped lower and then it's run up. It means if it closed here, it's still going to close with a loss. It's a bearish candle overall. Well, you could look at this and say it's almost a gravestone. It's at the bottom of a little bit of a downturn there. Yeah, if you got a decent gain here, Ken, it's a little bit of a reversal candle right there on Apple, and I wouldn't be opposed to taking it off. You had a little bit of gain. It might just keep going. It might go to 520, but that little bit of a candlestick action right there in that position that it's in right there is a little bit. It means short-term strength is what I'll say. There's one over here. It went down one day and then well it got the pop. Okay, but let's see some of the other ones here. Apple seems to follow those. There's one right here. It's similar, but this is a yeah, it's pretty much going sideways on those. But and there's one right here. So it gapping action, then it gives a kind of a gravestone, but short-term strength though. Yeah, that means short-term strength. It's a little bit of a reversal pattern, but it's not a trend changer. It just says some short-term strength right there. And again, nice trade, Ken. 2014 going into a bear market. Yeah, it's of course you have to wait and see. Um, Odds would say no. Odds would say more of a correction, and I know you're just kidding, Vegas. Odds would say more of a correction at this point, unless there's some big things that line up. Is there any big things out there that are lining up? Well, yeah, uh, you could look at all the money that's gone into the markets over the years. The trillions of dollars that have gone into the markets, and they're starting to pull that out a little bit. Nobody really knows the full extent of what's going to happen when that does go. Initially, when they announced where they were going to taper, everything rallied off of it. But it's still yet to play out. And we looked at the the yield curve and see that the rates there is zero, and that's what the Fed's all they got in their hand. If the curve starts to come back down and the banks start to make money and the rates are already at zero, then what do you do? Way too early to call on anything like that. Right now, corrections in the cards. I'm not saying today is the day where it's all bearish and not going to see bullishness for a few weeks. It's still too early for that. So it's just kind of interesting point in the market. And I'd welcome a correction if we get one. Jeff loves to trade the downside. Jeff, he loves to trade the downside. And when these things come, it's hard to hold any type of a bullish position through them because the sell-off has been so strong. So that's why you see us exiting today. We just had the options were too close there. Microsoft, yeah, there's another bearish move today. And the volumes they're up there today. For most of the stocks, the volumes are up there, and it's a very bearish move. So you look at this. You look at the last little pass. So we got a high, and then we got a new low, and we got a higher low, and it looked like it could have been a higher low right here. Sorry, a lower high and a higher low, but it didn't. It breaks through over here, drops way down, comes up to the 7, and then today hits the 7 once again, pushing back down off of it. Very bearish setup right here from Microsoft. This is one in my opinion too. It's gone too far too fast. It's gone so far. Looks like it's going to close down here towards the lows, holding 35. Really the bigger number. Let me back out here. see what we got for decent levels of support. 40, 34.5 is okay. It's hit it a few times through here. So I wouldn't, it might try to hold that. It's a long ways away from the 7. So odds here would say it could go a little bit, but there's some good chance of some consolidation. That's why I say it's probably a little bit too late to jump in here. But if you got puts, nice job. Yeah, wait till 2015, Martin. We'll know what had in store for 2014. Yeah, nice. Now, Ken, let me back. Sorry, keep backing all over the place. You're right. You're right. You say you see a Head and Shoulders here. Yeah, so do I. So the Head and Shoulders talking about right here, and it's a bearish Head and Shoulders on top of that. And I say bearish because the right shoulder is already lower. And see where the versus this shoulder here. The area for this to have broken, well, to be nice, I'll give it right through there, about 36.40 area, somewhere around that point. And not only did it break that, it gapped below it, and it's still at even the 36th level, bouncing down before it even made it back up there. So this makes it even more bearish. How far could you say that this might run? Well, you take the top down to the bottom, and I'll just go to this point. So basically 39 down to 36.5, so about $2.50 lower off this break. And so that puts this down towards the 34 level, down about that area. I see it picking up. That's really not that bad a level of support slash resistance for it right in that point. There, it could be a little bit around 35, but well, that's right where we're at. That could consolidate, but yeah, it's no surprise if it gets down to that and fills that price target there. That's set up from there. Yeah, we're at a Qualcomm. If it wasn't the low, that's okay. We just want to protect our position. All right, so we got out. And if it would have ran lower and gaps lower tomorrow, then again we would have, the downside would have been incredible had it gone against us tomorrow. If it pops back tomorrow, it's fine. We did what we needed, take some defensive action, and just in case to cover a bigger loss than we already had. So we jumped out. All right. Top two today. Let's run over those real fast. Hershey's. Now this is sold right back off, down there below 98. Okay, so just saying the upside's not ready yet doesn't mean it's not going to happen, but it's has sold off into the close. Silver Wheaton. Yeah, this is still showing some strength in here. Yeah, it's still right up going on the upper Bollinger Band like that. Turned around, went below the 7-day, turned around and running positive. Okay, so that one doesn't look too bad. Hershey's not quite as much. Kihu. Yeah, I mean, really, it didn't sell off all that much with the market. It's still above the 7. Another push up off that 7 and over 85 in that upper Bollinger Band would be very nice to see. But yeah, it's just caught up in that sell. Ouch. Yeah, so Tesla here. Let me look at this one this morning. It wasn't down nearly as much as it is, but so it got the highs, and it dips below the 7, and then it keeps crossing below the 7 over in this range. Yesterday, I mean on Friday, up to the 7 to run lower, but pulled back, and today pushing below that level, pushing below 140, pushing below into the lower Bollinger Band. Very bearish looking setup here on Tesla. Yeah, Humana, there's A lot of stocks out there doing this today, jumping to the lower Bollinger Band. Really, most of them have come in when that market that did that second round of selling. That's when most stocks really rolled over like that and finished the day down. Let me go look at pay. Now this is really holding its own, down 12 cents. Really, the candle's still in the upper Bollinger Band. Nothing too bearish here. DSW. Ow, yeah, this is a major sell-off here. If you're in puts on this, congratulations. I wouldn't argue taking something off the table if you happen to be in puts here. It's way too late to get into them. You know, with this being about $3, well, a solid $2 away from the 7-day moving average right now. There's a good chance of some consolidation, possible a snapback towards the $40 mark. It might come back and hit that, might keep going, but really it's so far oversold at this point, then there's a good chance you get a snapback where this thing pulls up on you if you're in it. Sell in May and stay away. Yeah, a little bit early there. Maybe it's sell in December. I mean, sell in January and stay away for a little while, right? Oh, okay. Yeah, this is a fun stock to look at. If you happen to be in it, they're fun to be in. But right here, there's just nothing, way too far gone. Yeah, I would agree, Jimmy. Going forward, after this move, and we go back here. Oops. Look at the S&P. It looks like it's going to close down here towards the lows of the day. This is a significant move. Um, Tomorrow, again, some of the big banks are going to start announcing. Wells Fargo, J.P. Morgan, and could give it a little bit of direction. But this is a technically significant move. Is it going to be raised tomorrow? Could. Of course, anything's possible, but just we got to stay on our toes because and see, let this market settle down a little bit and look for some more predictable moves than what we were seeing out there today for a new challenge trade. Okay. Well, you can always get a chuckle out of me, Trade Hound. It's pretty easy. Okay, everybody. Well, we'll be back on in the morning and see how the things turn out tomorrow. Again, we got out of positions on Qualcomm and Morgan Stanley. We're looking for, well, we got out of Boeing first thing this morning. We'll be looking for some new trades tomorrow. First thing on our mind is a new challenge trade. Get a new challenge trade out there and get that one off and running. All right, everybody, have a great night. It's great to have you on board, and we'll talk to you in the morning. Thank you. Bye-bye.